So what is Forex, right? Hey, what's up? What's going on? My name is Brandon. Some people call me OZ. Just don't call me Oz. I'm sure a lot of people are reading my name and pronouncing it as Oz. Even some people that I talk to every day still call me Oz, but it's OZ. It's OZ with a period, but that's not really important today. I wanted to make this video about what is Forex because a few months ago I got into the Forex industry myself and I just absolutely fell in love with it. And I've had a lot of people asking me what it is that I've been doing because I've been posting my journey and stuff like that. And honestly, I've been into so much just diving into this Forex industry in general because there's so many different avenues in Forex and just the investment space at all that it's kind of a hard question to just answer, like what exactly have I been doing. So today I just wanted to make a video about the general question, what is Forex, right? There are a lot of different terms used in Forex that everyday people just aren't familiar with. I'm not going to cover all the ins and outs of Forex, but hopefully by the time you're done watching this video today, you can leave this video with a better understanding of what Forex is. First, I will say that this isn't the stock market. We don't buy and sell stocks. When I speak on Forex, the stock market is not what I'm talking about. And the same goes for crypto. This isn't trading crypto. This isn't buying something and holding on just to hope that the value increases. That being said, what you learn in Forex can translate over into the crypto and stock market as well. The Forex market is typically where a lot of traders end up starting out because the movements are a lot slower and I wouldn't say more predictable, but they move more consistently. So I kind of just went through what Forex isn't. Now let's go through what Forex is. And as you can see, I've typed up some stuff here. So what is Forex? Forex just equals foreign exchange. And the internet definition for that is the foreign exchange market is a global decentralized or over-the-counter market for the trading of currencies. This market determines foreign exchange rates for every currency. It includes all aspects of buying, selling, and exchanging currencies at current or determined prices. And I got this off of Wikipedia. Okay, but what does that really mean, right? A lot of videos give this definition over here and they just move on. And then you're left just wondering what the hell it is that they even just said. Because really, what does this mean? One way to put it a little bit easier, and I pulled this up off my phone here, I just thought that this was a good definition. It says, trading Forex involves the buying of one currency and at the same time selling of another. So there's always pairs. You're kind of betting on which one is gonna beat the other. In Forex, traders attempt to profit by buying and selling currencies by actively speculating on the direction currencies are likely to take in the future. So what that means, you can buy or sell, it doesn't matter, and you don't actually own either one of them. That might have just went over some people's heads. I'll elaborate on that a little bit later. But sometimes I find it easier to understand if I put it into like a real life scenario. So basically, just to paint a picture for you, imagine you go to another country, right? But when you get there, you realize that the currency that you brought with you isn't really going to do you any good. So what you would normally do is go to that country's foreign exchange, and apparently they have these in airports a lot. I've never actually had to do this, but this is the steps that you have to do. You go to that foreign exchange and you exchange your US dollars or whatever currency you have for that nation's currency that you're currently in. So you basically just traded right there. Now say a few days go by and your vacation's done, your trip's done, whatever, and you need to go home and you have leftover money that you traded for and you need to convert it back to your currency because otherwise it's just going to be worth nothing when you go home. Sometimes when you do this, the value of your currency can be different, so the amount that you get back may be different than what you were expecting it to be. So say, I'm just going to use this example, and I don't know what the actual numbers are right now, but I know at one point the peso was 10 to 1. So for every $1, you could get 10 pesos. Well, that number can change from time to time, and it can change even just by a couple points, and that's considered a pip, and I will cover a little bit of that later. So say it went down from 10 to 1 to 9.5 to 1. That would be kind of a real life example of what I just said. But now to understand the foreign exchange market, I want to put a couple facts in front of you. So the first thing is there are 6.6 million, no, not million, that's way too, not enough. $6.6 trillion a day can flow through the Forex market. The Forex market is open 24 hours. It's open 24 hours a day, 5.5 days a week. And the reason for that is it's basically like Forex traders don't trade on the weekend. It's like we have the weekends off. So it's open from Monday to Friday. It actually opens back up on Sunday at 5 p.m. or whatever your time zone is. But for me, it's 5 p.m. But where's all this money actually coming from in Forex, right? Well, most of it is coming from the central and internal banks. Whoops. And so this is kind of just a pro to Forex in my opinion, is the use of leverage to enhance profit or loss in regards to your account size. And I'm sure you're wondering what that really means, right? This right here is where a lot of people start to get confused, and this goes back to the question where people say, what am I buying or what am I selling? And the answer is technically nothing. Technically, what you are doing is leveraging your money, aka account size, with contracts. You could look at this as a bet. So if you think it's going to go higher, you press buy. If you think it's going to go lower, you can press sell. All you would do is set your lot size, which is your contract, your take profit, your stop loss, and then you can go and make your order. The thing about that is you're not risking your whole account size for each trade. This is where risk management comes into play, and this is something that I'll cover in a later video. But so I personally, and I know a lot of other Forex traders just use this as a general guideline. They risk 2% per trade. Some people risk 1%. Some people risk half a percent. Some people risk half their account per trade, but that's not what we do here. So if I just wanted to show you an example really quick, this is a trade planner. So say I wanted to sell. This gray area is a stop loss. This blue area is my take profit. So you can adjust this and you can adjust this. And this number right here is your risk to reward. This right here would be where you would enter. And so say you have a pair and it's trending up and it hits your entry right here. It can only do one of two things. It's either gonna, one, blow through, or two, come down here, play around. It could not do what you want to right away, but it could come down here and you could win that trade. So one of two things is gonna happen here. So if you win the trade, you're gonna make, depending on what you risk, this is different. So let's just say, for example's sake, that you risk 2%. So this is a 4.5 to 1. It only shows the reward number here. It doesn't say 1 to 4 or 1 to 5. It just says 4. So say you won this trade and you risk 2%. That means for every 1 here, you get twice that. So this would be basically almost a 10%er. So if you're risking 2% and it blows through your stop loss, you've only lost 2% of the amount of money that you put into that trading account. And that right there is the power of this. Not a lot of people understand. They think that when they buy a pair or trade a pair, that they got to put all their money up at one time, and that's just not how it works. So that goes back to buy and sell orders. And I'm sure that if you've been watching anything about Forex, or even just watching me in general, you've seen me talk about these things called pips. And what pip stands for is point in percentage. I'll go into a later video in Forex Basics and actually break down what pips are, but basically all you need to know for now is pips are just how we base the amount of movement that we're getting out of a pair. So you can get 20 pips, 30 pips, 50 pips, however many pips you want, but it's basically just one of these numbers in here, and that's how you keep track of how far your pair has moved. Like I said, I will go into a video at a later date and break down a lot of this stuff even further, but for now I just want you to have a better understanding of what Forex is. But normally the pip is the 5th or the 4th place in the decimal spot over here. It depends on the pair. One thing about trading, and this is just kind of a general opinion, but it's also facts, is the internet has revolutionized trading. Because back in the day, you couldn't just log on to your laptop or your computer and place a trade. You had to be on a trading floor, and you had to actually not paper trade, or maybe you did paper trade and you actually had to call your broker. You didn't just have these online brokers. Things have become so easy today that anybody in the world, anywhere, mostly anywhere, it depends on regulations I guess, but can trade Forex. And so a lot of people ask me, what is it that you actually trade? And as you can see, I got Euro USD up on my chart right now, but there's different pairs, and I'm just gonna write a few of them out here. So that's just a few of them. That's a couple of the major ones, and that would be the euro, the US dollar, the Swissy, the Japanese yen, the New Zealand dollar, the Canadian dollar. There's also the Australian dollar and a few others. But when you're trading, you're basically just going to be trading one of these pairs against each other. An example would be some of these over here. So you got GBP CAD, you got Euro USD, AUD USD, USD Chef, USD JPY, Odd CAD. But these are just all examples, and you can open up any of these charts at any time of the day as long as it's not the weekend, and you can trade them. Major world events can affect the market. There's also fundamental, spelled that wrong, fundamental and technical analysis, which a lot of traders use both. Some traders only trade one way, some traders only trade fundamentally, some traders only trade technically. I personally use a mixture of both in smart money. And the way that we trade and look at charts is candlesticks. That's kind of the popular chart around the world, I guess you would say. I don't know why I'm tripping over my words, but there's bar charts, there's line charts, there's hike and ashy charts, which is just another form of candles. And a couple other elements of Forex would be Forex brokers. I mentioned them just a second ago. MetaTrader 4, which is what you trade on. And what was the other thing? TradingView, which is what I'm on right now. So to break this down for you, what I'm on right now is TradingView. This is where you chart and mark up, because MetaTrader 4 just looks like it's running on Windows 98. But this is where we actually place all of our trades. This is where you sign your broker into. So all these things kind of go hand in hand. You can't trade on MT4 without a Forex broker. And basically a Forex broker is just a service to put your money into the market. And with a Forex broker, you have these things called spreads. And the spread is just basically the cost of doing business. It's the fee that you pay your broker to put in your trades, pretty much. And these spreads can fluctuate from time to time depending on the volatility in the market. So real quick, before we are done here, I just want to go to a random chart, I guess, and show you kind of what I do as a Forex trader every single day. So I wake up, and the first thing that I would do is check Forex Factory and check the news. My computer's really laggy, and as you can see today, there's a lot of red folder news, and I'll go over Forex Factory and just fundamental analysis at a later date. But the first thing I would do is I would come here and I would check the news just to see if there was anything that I needed to be aware of. And then after that, I would come to the charts and I would just start looking through them. But if I was going to look at one chart, you would just look at this, and obviously you can see that this is just kind of going back and forth, but it's going to the downside. And as you can see, I was currently trading this pair earlier, and I would just mark it up. As a Forex trader, this is what you do. You look at charts and you base your decision based on what you see on the chart. Technical analysis. But at the end of the day, to sum it up, Forex is just the biggest financial market in the world. It has limitless possibilities if treated the right way, but that doesn't go to say that this doesn't come without risk. A lot of people hear about Forex, they watch a couple of videos, they open a live account, and then they're wondering why they blew their account the very next week. The Forex market may be a great opportunity, but it doesn't come without risk. I'm not going to tell you how to trade because that's a decision that's based up to you, but always do your research and never risk more than you can afford to lose. I'm going to say that again. Never risk more than you're willing to lose. Now, like I said earlier, this video wasn't meant to be a complete crash course on Forex. I just wanted to cover kind of a general outline of it and try to put it into words that I hope the everyday person can understand. If you have any questions, feel free to reach out to me. Where'd it go? Feel free to reach out to me at Oz.Brandon on Instagram. I will be going over things like how to get started, how to set up a broker, and just everything that has to do with Forex in the future. But until next time, I just wanted to come on here and, like I said, hopefully make a video that's easy for you to understand. But alright guys, I'm out. I hope to catch you on the next one.